Stocks. They sound complicated, right? But trust me, they're not as scary as you think. Think of a stock like a tiny piece of a big company like Apple or Amazon. When you buy a stock, you're buying a small ownership stake in that company. You become a part owner, even if it's just a teeny tiny part. Now you might be thinking, why would I want to own a tiny piece of a company? That's a great question. Owning stock gives you the opportunity to share in that company's success. As the company grows and becomes more valuable, so does your little piece of it. Of course, there's always the chance that the company might not do so well. Just like in any business, there are risks involved, but hey, that's the stock market for you. A little bit of risk and a whole lot of potential reward. So are you ready to learn more about how to potentially grow your money with stocks? Let's dive in. Imagine you're running a lemonade stand and it's booming. You want to expand, maybe open another stand across the street, but expansion takes money. That's where selling stock comes in. Companies need money to grow, just like your lemonade stand. They might need to build new factories, hire more employees, or develop exciting new products. Selling stock is a way for them to raise this money from everyday people like you and me. When a company sells stock for the first time, it's called an initial public offering, or IPO. It's like inviting people to invest in your lemonade stand's success. They give you money, and in return, they get a piece of the profits and hopefully a refreshing glass of lemonade. So, next time you hear about a company selling stock, remember that lemonade stand. It's all about raising money to grow and become even more successful. Now let's talk about how stock prices change. It's all about supply and demand, just like that popular lemonade stand on a hot summer day. If lots of people want to buy your lemonade, high demand, and you only have a few cups left, low supply, the price of that lemonade is going to go up. People are willing to pay more to get their hands on your refreshing beverage. Stocks work in a similar way. If a company is doing well and people believe it's going to continue to grow, more people will want to buy its stock. This increased demand drives up the price of the stock. On the other hand, if a company isn't doing so hot and people are worried about its future, fewer people will want to buy its stock. This lower demand can cause the stock price to go down. It's all a matter of how many people want to buy versus how many people want to sell. Section 4. Earning your share of the profits. There are two main ways to make money from stocks. It's like getting a double scoop of ice cream. Two delicious ways to enjoy your investment. The first way is through something called price appreciation. Remember how we talked about stock prices going up? Well, if you buy a stock at a lower price and then sell it later at a higher price, you make a profit. It's like buying low and selling high, just like those savvy shoppers at the mall. The second way to make money from stocks is through dividends. Some companies share their profits with their stockholders by paying out dividends. It's like getting a little bonus check just for owning a piece of the company. Not all companies pay dividends, but those that do can provide a nice stream of passive income for investors. So, whether you're looking to profit from price appreciation or enjoy the steady income from dividends, there are plenty of opportunities to make money in the stock market. Section 5. Lemonade Stand Dreams. Remember that booming lemonade stand we talked about earlier? Let's say you decided to invest in it. You bought a few shares of stock, becoming a proud part owner. Now imagine that your lemonade stand becomes the hottest spot in town. People are lining up for blocks to get a taste of your delicious drinks. As the business grows, the value of your shares goes up too. That's price appreciation in action. But that's not all. Your savvy lemonade stand owner decides to share some of the profits with the stockholders. That's you. You receive a quarterly dividend payment, a little thank you for being a loyal investor. See? It's not as complicated as it seems. By owning a piece of that thriving lemonade stand, you get to share in its success and potentially grow your money along the way. Section 6. Taking the first step. The world of stocks might seem intimidating at first, but it doesn't have to be. Like anything else, it just takes a little bit of understanding and a willingness to learn. Remember, investing in the stock market is like buying tiny pieces of big companies. You get to participate in their growth and potentially earn money along the way. Don't be afraid to start small and learn as you go. There are plenty of resources available to help you, from books and websites to financial advisors who can guide you on your investment journey. So, what are you waiting for? Take that first step and start exploring the exciting world of stocks today.